Hi, this is Pat Jennings again from thebizseller.com, and this is part 5 in my 5-part series on the basics of small business valuation. And in this last video, I want to talk about multiples. And specifically, I want to talk about the 2 most important factors that will help you get the highest possible multiple when valuing your business and coming up with your asking price. Now, earlier in the series, we talked about how for a smaller business with $1 million in sales or less that is managed by the owner, that the multiple of earnings is the best way to value the business and to determine a price range for the business when it's time to sell. And specifically, we talked about how the definition of earnings that should be used is the owner's benefit, or what is also called the seller's discretionary cash flow. Now, in this video, I'm going to go over a couple of the things that affect the multiple in the multiple of earnings calculation, but I can't cover everything here because there's hundreds of factors that could possibly affect the valuation of a business. Some apply to some businesses and not to others. But the 2 I'm going to go over always come into play when we're talking about valuing small businesses. And what I am going to do at the end of this is I'm going to give you a website link that you can go to get a more in-depth discussion on all the different factors that might impact the value of your business. But for now, let's cover the 2 most important things that always come into play. And number 1 is the recent track record of your business, or the direction in which your business is trending. If your sales and your profits, your earnings have gone up each of the last 3 years, that's the most important thing that can go into the valuation of your business and determining the multiple. No other factor is going to give you a premium multiple more than an increase each year over the most recent years in your earnings, because no one can argue with that. You know, if you're that's not a matter of opinion. If the past 3 years you've done 10% better than the previous year, that's exactly what all the buyers out there are looking for. It lowers their risk. It shows that you're a success, that your business is worth owning. If you've been flat over the past 3 years, doesn't mean you can't sell your business. Just means you're not going to get a premium multiple. And if your earnings have been going down each of the past 3 years, you have to take that into account. Otherwise, people are, you're going to overprice your business. But your most recent performance is the most important thing in the eyes of the business buyer. The second thing, and this is even more important because it's something you can still do something about. And the second most important factor in determining your multiple is whether or not you are going to offer seller financing. Because when you do, that multiplies the size of your market exponentially. 90% of business buyers need financing, and 90% of them get it from the seller. Yeah, some of them do get it from the bank or an SBA loan. Some of them have a rich uncle. But 9 times out of 10, they're going to get the financing they need from you. And if you don't offer it, that means 9 out of 10 buyers can't even consider your business. If you do offer it, that means 9 out of 10 can and will consider your business. And that is the most important factor in keeping your selling price high and getting a premium multiple for your business, because you're going to have lots of buyers interested and capable of buying your business. If you absolutely demand that you get all cash for the business, you could probably still sell the business, but you're going to have to discount it fairly heavily, by on average about 30%. That's what the statistics show. So when it comes to determining the multiple that you can apply to your earnings in the multiple of earnings method of valuing your business, your recent trends in sales and earnings and whether or not you are offering seller financing are the two most important factors. You can't get a premium if your sales have been going down and you're demanding all cash. You're going to have to lower your asking price accordingly. But if things have been improving each and every year, and you can show that in writing in your financial statements, and you're willing to finance at least 30 to 40% of the asking price, you're going to be in a much better position to ask a premium price and to hold the line on it, because you're going to have a lot of people interested in that business. Now, those two factors are just the beginning of determining your multiple. Like I said, there are dozens, maybe even hundreds of other factors that could go into determining the ultimate price and the ultimate multiple that you use in your selling price. If you're part of a franchise, that could be a big asset. If it's a well-known company and they do a lot of marketing and they have a great reputation and they have great training, you're going to be able to raise your selling price. If they're not doing that well, if they have got a lot of lawsuits going on, if it hasn't been a successful franchise, that's going to hurt you. If you have a good location and a good lease, if you have good employees that are going to stay behind, if you're offering training, all of these things, and like I said, there are literally dozens of things that could impact it beyond just the recent trends and whether or not you offer financing. So to get a more in-depth, comprehensive discussion of that, go to the website, the URL that's at the bottom of the screen. If you're on YouTube, there should be a link right over to your right that will take you right to the page on thebizseller.com, where we go into much more detail of the positive and negative factors that go into determining your multiple, and how you can use these factors in the negotiation process. So that's the URL at thebizseller.com that you see down below, or like I said, on YouTube, you should be able to click that link right to your right, and it will take you right to that page where we discuss multiples in more detail. But I just wanted to give you the two big ones, because there's no getting around your recent trends and whether or not you're going to offer seller financing. So thanks for joining me in this 5-part series. That's all for now, but check back. There will be other video trainings coming to this site soon.